Hello, welcome once again to this weekly podcast. And today's topic, the name is Investors Create Your Real Estate Portfolio by Investing in Silicon Valleys, in high-tech hubs, in the three high-tech hubs. Thank you for attending. This is Si Win Yi from the Yi Real Estate Network. And my special guest, once again, is Mr. Richard Vanny from Supreme Lending, the nation's leading investment loan agent who help investors obtain investment loans in all over the country, in all 50 states. And so welcome once again, Richard. Thank you for your time and I appreciate your participation in our weekly podcast. You've been providing a lot of value for many investors out there. So without further ado, I'm going to share my screen and articulate with you. All right, so what I'm going to start is, of course, Richard and I've been living in the San Francisco Bay Area for over 30 years and here in Northern California. And Richard, you've been living in Southern California for a long time as well. So in a way, Richard, the area that we live in physically have gone through some tremendous evolution in terms of real estate over many years. So, and the reason why the topic of this unique webinar is such that it's amazing. To my knowledge, there's no other real estate guru, for the lack of a better term, have made this kind of recommendation. So I'm very proud and excited to help our investors to focus and create their real estate portfolio by buying all the high-tech hubs in a good market. So without further ado, as many of you know, is the mother of all high-tech hub is the original Silicon Valley, San Francisco Bay Area. And so let me give you an example of the potential of investing in the high-tech hubs for the foreseeable future. Let me give you an example of this particular property, this townhouse built in 1985 here in Fremont, which is in East Bay, 20 miles north of San Jose. This is a townhouse, 2-bedroom, 2-bath, 1,100 square foot, built 1985 in Fremont. In 1992, this townhouse was cost $186,000. Today, 2021, this townhouse is valued at $950,000. Let me give you another example. In 1990, this single-family home, 3-bedroom, 2-bath, 1,698 square foot, also in Fremont, California, and it was built in 1990, more than 30 years ago. In the year 2000, 21 years ago, the price of this single-family home is $540,000. Today, 2021, this single-family home is valued at approximately 1.7 million. So these two examples, or prime example, what's going on in the California real estate market. And Richard, in Southern California, where you live, Southern California and LA Metro is huge, right? Well, 4 times bigger than San Francisco Bay Area. I'm sure you can give me tons of examples of housing prices in Southern California. Similarly, like 500K 20 years ago, now is more than $1 million, right? So is that what you're seeing? Richard, you lived down there for many years. Have you seen the gradual real estate buildup in the LA area where you live? Can you share a quick thought about what's happening in the past 20 or 30 years in your market down there?
Yeah, absolutely. And forgive me, my speakers were breaking up real bad, so I think I caught only a portion of that. But I did see the example that you posted, and Southern California has not been quite as crazy, obviously, as the Silicon Valley has. But it's been absolutely insane. And like it makes it harder and harder, obviously, to invest in areas like this where they've experienced rapid growth. At least, San Francisco and California, obviously, we can't invest here. But investing in those high-tech hubs in other states has proven to be very, very lucrative.
Yeah, very good, Richard. So without further ado, yeah, I agree. So the reason why, not because, Richard and I live in California all these years, is just that I want to use this San Francisco Bay Area, the original Silicon Valley, as you can see on this share screen. This is a blueprint, right? The San Jose original Silicon Valley is a blueprint of moving forward today and beyond of how to create your real estate portfolio by investing in the 3 following Silicon Valleys, high-tech hubs. And our network investors have already, we have already have a fair number of investors right now are that I'm mentoring, that I'm guiding through. They have purchased in all 3 of these high-tech hubs. And I'll tell you specifically what they are, where are they. But in addition, they already own their own principal home, primary home here in San Francisco Bay Area, Silicon Valley. So, this is so exciting for me. So now the Silicon Valley of the South is Austin Metro. In my opinion, this is just my opinion, it's not official, right? I mean, I just like to use these titles, right? And the Silicon Valley of the East is Raleigh, Durham, Chapel Hill, and even Charlotte, North Carolina. And the Silicon Valley of the Southeast, which is in the Space Coast, Palm Bay area in the Central Florida toward the Atlantic coast. So before I go to the specifics, some of you are asking, Wing, why not Seattle or Denver or Boise, Idaho or Utah? There are some elements of high-tech hub in these markets. True. However, because the home prices in these markets are very high already, and the numbers does not work for investors, right? The single family medium price home of these areas like $500,000, $600,000, $700,000 in this West market, Seattle, Denver, Boise, or Utah, whatever. So now here are the characteristics of these high-tech hubs that I'm recommending. Okay, and they are, and Richard, I want you to chime in momentarily. One is sun-built, warm weather. Number 2, most of these areas there's no state income tax. Number 3, post-pandemic migration from the West, Midwest, and Northeast, like San Francisco, LA, Chicago, New York City. They are those people, because of remote investing, they are migrating into these 3 high-tech areas. Population and job growth, obviously, right? You want to have this kind of economic engine. Population job growth, especially high-tech growth. And number 5, shortage of homes to buy and to rent. Many of these areas you're seeing bidding wars by renters. Number 6 is the double-digit rent increases, right? More cash flow for investors moving forward in these high-tech hubs. Number 7, currently there are a mere 1 month supply of homes, give or take. I know, what we've been seeing more inventories moving forward, which is good. We have a good correction, no more this rampant, huge multiple offers, so that's a good sign for a lot of people. So currently, still, there are 1 month supply of homes in these markets, and 6 months is a balanced market. So we're still seeing a seller's market for the foreseeable future. And number 8, these high-tech hubs that I'm recommending for investors are affordable, and for investors, they have good capitalization rates, good rent to value ratio, good cash and cash return, and good total return on your investment. So on this 8 bullet points, Richard, can you share with us your thoughts on these 8 bullet points and that are consistently have the characteristic in these 3 high-tech markets, which I'm going to talk about more.
Yeah, absolutely. And, obviously in the perfect world, all of us would have loved to have some insight into, the first and the real Silicon Valley into the Bay Area, because I'm sure we all would have bought 10, 15, 20, as many homes as we could have, right? To experience that growth. And it's cool because we're in a position now where we can see patterns of, as you said, these new mini, or not even mini at this point, right? You look at places like Austin and in Raleigh. I mean, they're not even mini anymore. They're big tech hubs. However, they're not, at the fully kind of, they're not fully grown out like California Silicon Valley is. So, I feel like, maybe 3 years ago was the ground level in these places, but we're still pretty close to catching a lot of these markets at ground level. And they have good fundamentals, as you mentioned. They have good weather. But more importantly, they have really tech-friendly laws and rules that are bringing these tech companies in, bringing the jobs in. And then as we're seeing, I mean, that leads to explosive growth in property values. I mean, explosive is the only thing really to use because, when you bring in these high income earners to these areas and there's such a demand for these properties, a house that would be going for 200,000 is now going to go for 350, 400,000. And I think most of these areas are still at their infancy in terms of their growth into established tech hubs. So, we're likely going to see a lot of these areas continue to grow, continue to increase. And obviously that makes for solid rentals on the cash flow perspective, but also, to capture some of that broad level growth.
Wow, very well said, Richard. Very good recap. So briefly, before I'm going to go over the Google map in each of these 3 high-tech areas, let me share briefly with you the pro forma, the typical price and the rental income that you can get as an investor. So in the Silicon Valley of the South, Austin Metro, 30 to 50 miles north and south of Austin, we have cash flow properties as low as $235,000, new construction or newer resales at events for like $1,750. We put 20% down, you will achieve positive net cash flow monthly around $250 to $300. And then San Antonio, same, new construction around $235K. So events for similar $1,750 typically, and you will cash flow at 20% down. And Silicon Valley at the east, Raleigh, Durham, Charlotte, and Chapel Hill, North Carolina, part of the Research Triangle Park, which is, they call it the Triangle. We still have some cash flow properties in Raleigh. For example, just an example, $330K, it rents for like $2,000, $2,100. So you put 20 to 25% down payment, you will achieve monthly positive cash flow. And then Charlotte, same thing, right? $300K, typical single family home, brand new or newer resales. It rents for like $2,000, $2,100. Cash flow similarly, 20%. And finally, this relatively small hub in Silicon Valley of the Southeast, I call it, is a Space Coast, right? Space Coast, Cape Canaveral, Kennedy Space Center, and the 3 legend, Jeff Bezos, Richard Branson, and Elon Musk. They are doing this private space program, space travel, space tourism, exploration, and then we have, all kinds of great things going on in Palm Bay, Florida, which is 1 hour east of Orlando. And homes there, new construction, like $250, $270K, renting for $1,750, $1,800, 20% down, you can cash flow. So with that said, so let's go over the map, right? So I know none of us have a crystal ball, right? I mean, we don't know just because the area prices have gone, quadruple in the past 20 years. It does not mean the other areas, the other type hub going to follow precisely what's going on with the Bay Area. But as you can see, like I said, I live in the Bay Area. I still live here for the past 30 years, and it's amazing. Oh, by the way, the example that I gave you, the townhome and the single family home, it happens to be my properties that I owned over the years. So just like that, right? I mean, I wish I could buy more, and Richard said the same thing. Moving forward, you keep saying, investors keep saying, I should have bought more at such and such day. The best time to buy is yesterday. The best time to invest in real estate yesterday. The best time to invest in real estate is 30 years ago, 10 years ago, 20 years ago. So you know what I'm saying? So it's just, anyway, I mean, original Silicon Valley started off from San Jose, right? Which is right below here, right? And then before you know it, it just blossomed into the peninsula, into San Francisco. And then all the growth have gone in, spawned over to the suburb, to the East Bay, Fremont, and Oakland, and then, all the way down to the Tri-Valley, San Ramon, Danville, Pleasanton, Livermore, Tracy, Stockton, and into Sacramento, right? I mean, see, the suburban growth, this migration, is happening, in over the past 30 years. And the 3 tech hubs that I'm going to share with you are really, in a way, that's really no different. So let's go over Austin Metro. Some of you are thinking, some of you have been following us, you're thinking, does Austin Metro, Silicon Valley of the South is already tapped out. I mean, not really true. Yeah, if you deep inside Austin, yes, it's tapped out. It's amazing, right? Richard, you've been following my investors. You've been doing investment loans for our investors, not just our investors, for many other investors, especially in California over the past 10 years. I've been promoting Austin for the past 10 years with my partner, Ken Renner, right? And Ken Renner is still promoting Austin Metro for my group in Central Texas. Really, I mean, before 2020, when we seen, inside Austin, from 2020 to 21, Travis County, I mean, the median price today, like $580,000. I mean, that is shocking. Our investors were buying rental property as a result of my recommendation all these years consistently. Imagine, have you bought a single family home, new construction inside Travis County, inside Austin Metro, right now, inside for like, 200,000, 250,000. I mean, in 1 year inside Austin, I mean, it has grown to like almost $600,000 median price. Anyway, skyrocketing prices and all that. So the few investors that enter the Austin market before 2020, look, you receive a windfall. Congratulations for those of you who took action. And Ken Renner, along with myself, congratulate all of you. You made a killing in Austin in the past few years, right? I mean, but now you can't. It's not affordable anymore for investor. You have to go out in the outskirts. You have to go beyond Austin. There are still opportunity. The Silicon Valley of the South, Austin Metro, is really Central Texas. You can even include San Antonio below as part of this Austin Metro, really, but for years to come. We see the growth around here. So all the growth has spanned out way beyond outside Austin, right? We're talking, let me give you some example. Some of the smaller cities. I mean, we no longer encourage our investors to do Round Rock or Pflugerville or Georgetown because they're already too expensive. Right now, a single family home for 1,500 square foot is already like $450,000. It was just shocking. So this corridor within 20 miles of Austin, the outskirts are way too expensive. So we are going to suburbs, right? Suburban growth up 1 hour north to Temple, Belton, and Killeen, and then 1 hour south into San Marcos, New Braunfels, and into San Antonio. So this is the path of growth, still going for years to come. Austin Metro, Central Texas. Right now, still cash flow, right? And 30, 40, 50 miles away from Austin. So we're still doing well. So don't think there's no more opportunities. Suburban growth, the migration into the suburbs from Austin for years and years to come, population growth, job growth, and more high-tech companies moving to Austin. So before I go into the second hub, Richard, what are your I mean, you've been working with our investors, you have been doing investment loans for our investors that have purchased in Central Texas over the years, especially the last 12 to 24 months. What are your thoughts about the potential for growth in the Silicon Valley of the South, Austin metro?
Yeah, I mean, I actually purchased a couple myself, year and a half ago.
Wow.
And like anything else, I mean, I wish I bought 5 of them or 10 of them. I wish I had cup of noodles if I had to put every dime I had into that market, because not only have they rapidly appreciated, I mean, I probably up 40%, 50% in under 2 years in value, which is insanity. But what we're seeing now is rents are actually increasing as well. And I actually saw an article on Barron's, the financial magazine, and they were basically talking about rent inflation and how it's here to stay, and how it's really just starting, meaning rents are going to continue to increase to catch up to the real estate market in the coming years, which, I've owned real estate for 12 or 13 years now. And, you always think you understand how real estate builds wealth. And I can tell you, you don't really understand it until you've owned real estate for at least a decade, because that's where you start seeing the wealth building, right? You invested for, 8%, 10% return, you're making 250 in cash flow. Well, what happens when rents go up $300? Now you're making 550 in cash flow, right? What does that do to your return at that point? And then also, the fact that you start paying down so much principal there at that point as well. So, I mean, the market obviously has grown a lot, but there's sustained growth. I mean, even sitting here listening to your presentation, I'm like, I need to try to take down another 1 or 2 ASAP. But I mean, more and more people are moving into these markets, and more tech companies are moving into these markets. So I think we're going to see sustained growth. Maybe not 40% a year like it's been the last couple of years, but probably better than what it's been in California, which is crazy to think, because we've been booming here in California.
Well, absolutely. Very well said, Richard. The rent is increasing in many markets at double digit, 10, 20%. So you're thinking, wow, if I buy a $300,000 or $350,000 single family home, how can I get cash flow, right? Yeah, you're getting cash flow now because the rent is like at least $2,000 right now. Is that amazing? So, it's just amazing. You can still get cash flow in the market that we are discussing. So with that said, my takeaway with Austin Metro, you can still buy cash flow properties into the suburban area in Central Texas, outside Austin Metro. And my team, Ken Renner and his team, been in Austin Metro for the past 35 years. So, he's been helping. He has helped so many people become so rich. Those investors that pull the trigger and buy in Austin all these years, especially in the past few years. So there's no crash, and there's none of those kind of things, because we just stated, there are still tremendous amount of demand and still lack of supply. That's the bottom line, right? 1 month supply in this kind of markets, 6 month supply is balanced. We're not seeing that. All right, so let's segue into the second high-tech hub that our investors are buying, which is in North Carolina, which is the triangle. They call it triangle. Is Raleigh, Durham, Chapel Hill, and you might as well include Charlotte, which is 100 miles southwest of Raleigh. It's sort of in the same metro, if you will. So as you can see, Apple is coming already, right? Major Apple campus is coming into Research Triangle Park. As you can see, Research Triangle Park is right over here. This is the huge tech hub, been growing for many, many years. And if you buy investment properties, our investors, if you want to buy within 10 to 15 miles right here, Research Triangle Park, it'll cost you like $450,000 for single family home. Newer resales. You're thinking, hey, and I can't cash flow, really? Yeah, kind of. You may get like $2,300 rent if you buy $450,000 single family home as an investment within 10, 15 miles or Research Triangle Park, you may have a negative of $200. It's not so bad. Some of you still should do it, right? In fact, one of our investors closed escrow a few days ago. She bought a $450,000 single family home, about 20 miles from Research Triangle Park in Raleigh, which is around here, 20 miles away from the RTP, Research Triangle Park. And she's getting like $2,300 rent. So she understands the slight monthly negative, but she's focused on appreciation. On this Silicon Circle, I call it Silicon Circle, right? If you buy, the closer you buy Research Triangle Park, it'll cost up to $450K for a typical single family home. But if you buy like 30 miles away from the Silicon Circle, a little bit further away, for example, the areas that are good is like Morrisville and Cary, and the northwest part of Raleigh. Those are within driving distance, 20, 30 minutes into RTP, and those prices around $400K. So if you want to buy, or $350K, right? If you buy a single family home cheaper for $300K, you have to buy a little bit further out, right? Further out on this triangle, like into Durham, a little bit to the northeast, or to Raleigh on the south of Raleigh or northeast of Raleigh. But still, anything within the 30, 40 mile radius is a good purchase. The rental market is strong. Obviously, you can cash flow at $350K, $2,200 monthly. You can slight monthly cash flow with 20% down. So not so bad. And then, of course, Charlotte is a little bit have a similar growth with Raleigh, which is Charlotte's right here, right? So anyway, similar pricing. Charlotte like $350K, renting for $2,200. You can cash flow at 20 or 25% down payment. So with that said, here's my recap on the triangle in North Carolina. So Richard, what are your thoughts about buying in the Silicon Valley of the East, Raleigh, Durham, Chapel Hill, and Charlotte with the Research Triangle Park? I can't hear you, Richard. You're mute.
If there's sadness in my voice, it's because I am sad. I had the opportunity. I mean, how long have you been talking about Raleigh? How long have it's been at the top of people's tongues for, I don't know, 3 to 5 years now. And like a lot of you out there, I snoozed and I sat on the fence, and man, I wish I didn't. Because obviously Raleigh's exploded and is continuing to grow from here. And like you said, there still are opportunities to be a part of the growth. You may need to put in a couple $100 out of your pocket. But you're buying good quality assets in good neighborhoods as well. And typically you're paying down more than $200, $300, $400 a month in principal. So the net is still a positive a lot of the times once you factor that in. But yeah, if you have the opportunity to enter that market and be within $100, $200 of cash flow, I think it's a great place to invest. And, values have gone up really everywhere, right? And if you are going to invest in an appreciated market, you want to invest in strategic places. And obviously following tech and buying in areas where there's still a lot of growth happening in tech is a good way to hedge against, the prices being in the market being a little higher.
Yeah, absolutely. Yeah, that's right. Some investors are thinking, oh, the price is too high at $300,000, $350,000. And Richard, I mean, we're going to be asking, compared to what? If you think today these investment homes are too high at 300, 350K, I mean, compared to what? I mean, this kind of a comment are really are irrational, right? I mean, you're not thinking like a true investor. Too high compared to what? Compared to inflation, compared to gold, compared to a stock market. As long as you know a particular area in this high-tech area, or continue to grow, continue to have in-state migration, continue to have a shortage of homes to rent and to buy for the foreseeable future. And if the rent if the tenant, if a tenant is paying you 2,000, 2,200 to buy your investment home at 303K, you're good to go. You have cash flow. Okay, just ride the wave, ride the high-tech wave into the future, because the chances are, long-term, 5 to 10 years from now, you'll be thinking, if you didn't buy today, 5 to 10 years later, you could be thinking, oh, I should have, could have, would have. Richard, you and I have been in this business for a long time. 5 years ago, people at that time said, oh, investment homes high, prices too high. 10 years ago, our investors saying, oh, prices at time was too high. Now, fast forward to today, those prices will double, even triple in value in the past 5 to 10 years in certain market that we have promoted prior. So, anyway, I hate to be so philosophical, but the final tech hub that we can talk about, a lot of people still does not know, is a Space Coast in Florida. It's the Palm Bay, an hour, east of Orlando, along the Atlantic coast, Atlantic Ocean. So Palm Bay and the surrounding area is a Space Coast. It's smaller than the Silicon Valley of the East. Raleigh, RTP is smaller than Silicon Valley of the South, but it's very unique. It's a space technology, it's space exploration. In case you have not heard, the space program, there are the three legends of high tech, right? And Richard Branson and Jeff Bezos and Elon Musk. They are doing the space tourism, space exploration, space travel. A few months ago, they themselves went into space, right? So a lot of things happening. The government are also doing a lot of space exploration. The U.S. Air Force, they have a new branch. It's called Space Force, right? They are doing space Star Wars militarily, governmental-wise. And there's a Air Force base, Patrick Air Force Base, located 20 miles north of Palm Bay. That are one of the headquarters for the U.S. Air Force Space Force. And of course, you have a lot of aerospace companies here. And a few years ago, you have Port Canaveral and Kennedy Space Center, rockets and all those spaceships going up there over the years, as you know. So Palm Bay is still a mystery to a lot of people, but not to us, right? And the single family home, we have their new construction, like 250, 275K. That rents for $1,850, so you can cash flow right now. But this area in the past few years in Palm Bay is growing very, very fast. So just get in, investors get in. I mean, the prices are rising soon, maybe a year from now or longer, you're not going to cash flow anymore. But right now, it's still very good area to invest. Richard, I don't know how much you know about Palm Bay. I think some of my investors did some financing with you recently, in the past 12 months, I'm not sure. So, Richard, what do you know about in my definition, Silicon Valley of the Southeast, Space Coast, Palm Bay? What are your thoughts?
Yeah, I mean, it's Palm Bay, I think, is a unique market within unique markets, right? Because yeah, it's another tech hub, another Silicon Valley, but it's dedicated, or rather, what's the most prevalent there is really the space industry. And there's only so many places that you can launch around the country, and having that price point actually in not only a tech hub, but a specialized, really Silicon Valley kind of hub that's geared towards obviously space travel and everything else, and rockets. And there's a lot of businesses and supporting businesses, manufacturing businesses for those industries coming in there as well. Just because, once again, there's only certain areas, certain places in the country where they are set up to launch rockets. So another great market within the various markets you spoke of. And it's all about supply and demand, right? And also regulations within those states to bring in that tech business. And whether you're in Austin or Raleigh, they have a lot of incentives, of course, for these tech companies, and as does Florida. But what's even more unique about Space Coast is, in addition to obviously the tech-friendly tax laws. On top of that, you have the supply and demand aspect of, hey, there's not tons of places where you can conduct that type of business. So I think Space Coast has two things going for them, once again, which is, a combination of it being a tech hub and the combination of the scarcity of launch sites as well. So I think big things are to come from Palm Coast.
Absolutely, Richard. As we are about to conclude on our podcast here, look, look, investors out there, it doesn't have to be our network investors. Investors from all over the country, all over the world. There are many opportunities to invest in different asset classes, different type of real estate. I get it, right? I mean, Richard, you and I, we get it. There's so much opportunities out there, but in my organization, the Real Estate Network, we focus on a real estate asset class, which we believe in the past and in the future is the best performing real estate asset class, which is single family homes, mainly in a good, fast growing area that still are affordable, that investors can buy and still can cash flow. You know how challenging that is to buy cash flow properties. So to recap, my recap, and I'm going to ask you to recap once again before you do that. So my takeaway of doing the presentation is, and I'm just so excited working with look, most people for whatever reason, fear or whatever, they can't do it, not just now, but over time. That's why, real estate is very, very difficult for most people. But I'm working with a core group of investors, my network investors, like almost 15 of you, they are buying in all three of the tech hubs that we've been talking about, which is amazing, right? And of course, and they already, most of my investors are located in the Bay Area. So not only they have a principal home here in the Bay Area, in Silicon Valley, original Silicon Valley, now they are following my recommendation, and they buying properties in Austin Metro. They bought a few years ago. They're going to buy some more. They're going to buy into Silicon Valley of the East, Raleigh, and then now Silicon Valley of the Southeast, Palm Bay. So I really appreciate working with you. You guys are very highly motivated, very ambitious, and you understand the value of diversifying your real estate portfolio into these 3-4 high-tech hubs. I really appreciate working with you. And for those of you who are on the fence, consult with me, consult with Richard, get some financing, get loan pre-approval, pull the trigger. I'm here to mentor you. Again, I don't have a crystal ball, but these 3 high-tech hubs, like, who knows, like 15, 20 years behind the Bay Area, Silicon Valley, right? So the future is very, very bright as far as I'm concerned. So it's a matter of taking action. So I really love what I'm doing right now because, some of you are really understand the value I'm providing, helping you to create a awesome diversified portfolio, buying these 3-4 high-tech hubs as we speak. Thank you for trusting me, working with me, and I really admire you guys. I really enjoy working with our investors that have the ability the courage to pull the trigger so you can achieve your financial freedom. So before I let you guys go, Richard, what are your final thoughts, your recap, your takeaway from this buying, in these high-tech hubs for investors?
Yeah, I mean, don't make the mistake a lot of people make. And look, I have 20 properties across the country, and I've got 2 in these high-tech hubs. And I've experienced a lot of growth, but I've got 2. I should have 10, and I thought 3 years ago, I'm like, oh, they're high compared to these other markets I'm used to investing in. And, not quite the return that I wanted initially. And, obviously, clearly that was a mistake. I finally did buy some, outside of Austin and Texas, and it was immediately a regret, obviously, that, I was a little closed-minded to looking at properties that were outside the scope of normally what I was looking for, and maybe a little more expensive than typically what I was buying. But when I pushed that to the side and I got those 2, obviously the impact and the returns have been immense. So don't make the mistake a lot of people made. Don't make the mistake I made in some of these markets, because they will continue to grow. And like anything else, I mean, 3 years from now, when we do this podcast, be rest assured I'll be telling you that I didn't sit on the sideline again, and I did take some action on some of these other markets because, in all reality, there's no way to perfectly time the market, and more often than not, trying to time the market causes you to sit on the sidelines and not participate in the market at all. I mean, everyone thought the stock market was peaked out 3, 4, 5 years ago. It's up 30%, 40%. Some stocks even double since then. And same thing with the real estate market. So, I'm definitely going to take a bigger look and take down a couple of these high growth tech markets. If prices move down a little in a couple of years, then I'll buy a couple more. Dollar cost average. The fundamentals are so strong that, in the long term, I think it's going to be a good bet regardless.
Well, once again, well said, well thought out presentation, Bishop. I really thank you for your time, your value, and your expertise and your perspective, really helping a lot of our investors. Thank you so much for your weekly participation in our podcast. Richard Advani from Supreme Lending, thank you so much. Thank you everyone for listening. This is Si Wing Yi from the Yi Real Estate Network. Thank you so much. Have a nice day. Bye-bye.